Good morning. This is all you need to know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. India's retail inflation rises to its highest since July 2018. The figure in September stood at 3.99%, higher than the Bloomberg poll of 3.8%. Hindustan Unilever reports a volume growth of 5% in the second quarter, in line with analyst estimates. The company's bottom line was boosted by lower tax expenses. Wipro will be the only Nifty company reporting earnings today. It is likely to remain a subdued quarter for the IT major. The Reserve Bank of India has increased the withdrawal limit of account holders of PMC Bank to 40,000 rupees from the earlier 25,000 rupees. And former captain of the Indian cricket team, Sourav Ganguly, has become the new president of the country's cricket board. He was elected unopposed. Let's talk about the US markets now. The three indices ended with moderate losses as investors tempered expectations from the US-China trade deal. This comes after China said it wants one more round of talks before it signs on what President Trump terms a Phase 1 deal. Ranita Young of Bloomberg News wraps up Monday's trading action in this report.
U.S. markets closed lower on Monday after fluctuating for much of the session as investors digested the latest information from the United States and China trade situation. Now, on Friday, the U.S. and China made a partial trade agreement. No papers were signed yet. However, on Monday, China said it needed to iron out a few more of the details before signing anything. That made investors a little bit nervous, taking the risk off for much of the session. Now, focus will shift quickly to banks as corporate earnings season heats up, and banks will kick it off during this week. We saw JP Morgan Chase and Morgan Stanley both up for the fourth straight session. Goldman Sachs fell during the session, and we also saw another company that was interesting, Nike, reaching a record during the session as well. Meanwhile, treasuries and gold continued to climb. Palladium hit a new record, that's the auto catalyst metal, and crude oil fell a little bit. Now, on the U.S. data front, U.S. retail sales are forecast to increase for a seventh straight month. And that's a look at your Wall Street action on Monday. In New York, I'm Ranita Young for Bloomberg News.
All right, let's also look at the Asia-Pacific region with regard to the markets. Rosalind Chin of Bloomberg News is joining us from the Hong Kong studios. Good morning, Rosalind. Seemingly Japan playing catch-up after being closed yesterday, but not as much red on the screen based on what we heard overnight on the trade talks?
Certainly, there are still markets here, quite a few, just about hanging on to positive territory, but certainly not as convincing a move into positive territory as yesterday. We're certainly, you're right about that. Now, we've got the Chinese markets just opening, actually, and those are the markets which are trading lower. We've got the Shanghai Composite, CSI 300, and the Chinex all down by between a fifth of 1% and a third of 1% right now. Overall, though, as you say, the Japanese markets playing catch-up, and those are really helping to drag up the broad index, the MSCI Asia Pacific Index, which is up by 0.7% right now. Nikkei making gains of 1.8, Topix up by 1.76% at this point in the session. Now, Japan also is picking up the pieces after that typhoon, that huge typhoon hit over the weekend. We are looking at electronic and transport maker stocks in the aftermath of that. We've had the Japanese Prime Minister Shinzo Abe saying that at least 33 people died after that typhoon, and Japan's Taro Aso saying that they will consider extra budget measures if needed for that typhoon. The damage, of course, is being assessed now after that typhoon has been and gone. We've got companies that were shut down, some factories, and they're now assessing the damage of that. Bloomberg Intelligence saying that we could see between $5 and $10 billion worth of insurance claims. Elsewhere in the region, the Kospi is just about flat. So Samsung, they're leading those gains, of course. And in Australia, the S&P ASX 200 index, again, just about flat, but just about hanging on to positive territory, up by just 0.03% at this moment in time. We did have some latest minutes from the RBA meeting from October 1st. They were saying that the case for taking rates below 1% for the first time ever outweighed the risks posed by its dwindling policy ammunition. The RBA board also noted that threats to global growth, ongoing easing by other central banks, and a stubborn unemployment rate in Australia warranted lowering the cash rate to that record 0.75%. The October 1st rate cut was seen by the RBA as a starting point, a strengthening starting point for the economy. So those notes out from the central bank in Australia there. And and the S&P ASX 200 now just about flat. So a few things moving on, but certainly the sentiment that shine coming off a little bit more off that those trade talks that went on over the weekend. China still playing it cool, saying that it wants to iron out more details before signing anything. And we note also volumes are slightly lower than average. Back to you.
Thanks so much for that, Rosalind. Now, I do want to talk about the China-US trade talks, and as Rosalind was just mentioning, China seems to be holding on before it strikes a trade deal with the United States. The Chinese have insisted on one more round of talks before any official signing ceremony. The plan for more negotiations has been confirmed by Treasury Secretary of the United States, Steven Mnuchin. Selena Wang of Bloomberg News brings you the latest in this report.
China wants to hold more talks before she agrees to sign any agreement, potentially at the APEC summit next month in Chile. Our sources are also telling us that China is looking for Trump to remove the planned tariffs in December. So it looks like the two sides are still not quite on the same page when it comes to the details of what's actually in this handshake agreement, as well as how close they're actually to signing it. On the one hand, you have Trump saying that phase one is almost signed away. They can move on to phase two. Then you have the official statements from China, as well as the main state media, declining to even call this a deal at all. So it's really no surprise, though, that China is becoming increasingly wary of Trump. Trust has substantially broken down over the two sides over the past year. We've been here before where the two sides have been close to a deal, only for talks to break down quite suddenly and for tariffs to increase again. There's also a view in Beijing that for Xi, it's politically unfeasible for him to agree to any deal without the complete removal of tariffs. And let's not forget that the billions of dollars of existing tariffs still remain in place.
Selena, if you're looking for signs as to how these next round or rounds of talks could progress, what would be something to look at?
Well, it certainly is like reading the tea leaves at this point, but one data point that investors can look towards is the People's Bank of China's daily yuan fixing. So the thinking goes that if the fixing comes in stronger than expected, that may be a sign of goodwill to Washington to appease Trump and show that China is not manipulating its currency to boost exports. So far, we haven't seen that sign. We saw the daily fixing on Monday come in pretty much in line with what the fixing was on Friday. So we'll be watching very closely today at 9:15 to see how that may change the mood. We did have Mnuchin suggest that he is considering removing the designation of China as a currency manipulator if the phase one deal is completed. We don't yet have details on the currency agreement that the two sides agreed on, but Citigroup has mentioned that it's likely an agreement for China to not devalue its currency rather than a forced one-way appreciation. But when it comes to tangible results of this deal, it looks like vague commitments at this point around the currency, around intellectual property. We're still a really far ways away off when it comes to really hammering down structural issues around China's economic and industrial policies.
All right, let's also talk about the latest on Brexit. Queen Elizabeth on Monday laid out Prime Minister Boris Johnson's Brexit plan before Parliament. However, that did little to boost sentiment as the European Union says that it is not ready to sign a deal just yet. Kathleen Hayes of Bloomberg News brings you the latest.
The Queen basically laid out for Boris Johnson exactly what he gave her to say, a look at how the economy is going to look, what his policies will look like once his Brexit deal is passed. That is the key here. You can see her sitting down in the House of Lords, the finest she could get here in terms of the presentation by the Queen. Quite an impression. And she, too, following Johnson's lead, went right to the importance of Brexit.
My government's priority has always been to secure the United Kingdom's departure from the European Union on the 31st of October. My government intends to work towards a new partnership with the European Union based on free trade and friendly cooperation.
In a statement after the Queen's speech, Boris Johnson, who also attended the speech in the House of Lords, said he can work on immigration, healthcare, things important to the British people. Once this deal is passed, he said people are tired of gridlock. They don't want to wait any longer to leave the EU. But this is a very difficult question, just as it was for Theresa May. He has so little support in Parliament. He's so far away from majority, even in his own party, the Conservative Party, that he is looking at the specter of calling for a early general election. But that, too, is going to slow things down ahead of that October 31st deadline. And the opposition is strong across the board in his own party, the opposition Labour Party. In fact, Jeremy Corbyn, after the speech, said Boris Johnson promised to dazzle us with his vision. It turned out to be nothing but fool's gold.
Fool's gold. All right, let's have a look at what else is making headlines across the globe. Sue Keenan of Bloomberg News brings you the First Word headlines.
We start with the Reserve Bank of Australia, which says the case for taking rates below 1% for the first time outweighs the threat posed by dwindling ammunition. Minutes from the October 1st meeting show that in considering a third cut in 5 months, Governor Phil Lowe noted that threats to global growth, continuing global easing, and stubborn domestic unemployment warranted lowering the cash rate to a record 0.75%. Moving to the latest on the Turkey-Syria issue, President Trump is imposing sanctions on Turkey for its military incursion into northern Syria. His statement comes just days after he effectively cleared the way for the offensive by pulling U.S. forces out of the area. The sanctions will increase steel tariffs back to 50% and mean a pause to trade negotiations. The Turkish army claims to have killed hundreds of terrorists since the incursion began last week. Meanwhile, the current president of the European Union says there will be no Brexit deal before this week's two-day leaders summit. The Prime Minister of Finland says time has run out to reach an agreement before Thursday's meeting. The news came as Queen Elizabeth delivered the traditional speech outlining her government's legislative agenda. Prime Minister Boris Johnson's plans include a general election on his Brexit strategy. Moving to Hong Kong now, the protests there may have taken a dramatic turn, with police saying a homemade bomb was detonated near a patrol car on Sunday. The bomb disposal team says the device was set off in Mong Kok, about 10 meters from a police car. No one was hurt in the explosion, but police say it is clear the intention was to kill or seriously injure police officers nearby. Police say the bomb required some knowledge of chemicals. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's turn to the Indian markets now. Agam Vakil is here to set you up for the day's trade and also what's happening in the futures and options space. Agam, you've been busy the past couple of days, earnings for all the companies that you track. But having said that, you're also looking at the markets. How are they looking this morning?
Well, steady, I would say, based on the SX Nifty futures, Alex. Again, we did see a lot of traction coming through yesterday. Of course, this is the SX Nifty indications, and this is likely on account of, well, the kind of gains that we've seen across Asia. But how was yesterday's day of trade? Let's also take a look at that. Advances coming through, and eventually, well, we've seen a relatively mixed day of trade. As far as the banking indices go to, we are looking at, well, gains for the private sector banks, but no such thing turning out for, well, the public sector units. So keep an eye on that one. There was a little bit of a weakness there. ADRs for now are, well, mixed, I would say. We're looking at ICICI Bank and Tata Motors. Of course, Wipro will be the other one which will be in focus, considering the company does announce earnings today. We'll be watching out for that. It was about, down up as much as a little less than 1%. Fund flows, we've seen FIs buy into stocks for a change, and this clearly is perhaps a welcome surprise. But with FIs buying to the tune of 896 odd crores, GIs on the other hand selling stock worth 425 odd crores. So a little bit of a change in the sentiment as far as FIs go. There was an advance for TCS, HDFC Bank and Axis Bank. Besides that, let's also take a look at futures and options because, well, again, we're starting to see some amount of traction. Short covering as far as the Nifty futures go. Can we keep an eye on, well, some of these levels, which include 11,340? Let's watch out for that. We must move on as far as the Nifty futures is concerned. Well, unwinding it to the tune of 4%. In terms of your options, well, levels, we're keeping still an eye on 11,000 as the support. support and 11,500 on as far as your top end is concerned. Well, there's a lot of activity across the spectrum, but the India VIX did advance even further, still above the mark of 17. So, well, it is still time to remain cautious. The Nifty put-call ratio also edged higher to around 1.17 against 1.13. And moving on, in terms of stocks, there are none in ban, but we are keeping an eye on Century Textiles, but it did decline, as was the case for SRF. So both these stocks came off, and they did see fresh shorts. IGL continues to show strength. In terms of stocks which are unwinding, there may not be too much, but United Breweries and Strides stands out. Strides is an interesting case here. It's advanced and it's looking at a little bit of recovery, so clearly a case of short covering. Well, it was a mixed day of trade, Alex, as we had expected, and it's likely to be so today as well.
Thanks so much for that, Agam. All right, let's turn to the economy now. We've got macro data coming in. While wholesale inflation fell to a 3-year low on Monday, retail inflation came in at a 15-month high. The 3.99% figure for September was the highest since July 2018. Pallavi Nahata takes us through the details in this report.
Retail inflation rose to 3.99% in September compared to 3.21% in August, according to data from the Statistics Ministry, which was released on Monday. A Bloomberg poll of 37 economists had estimated inflation at 3.8% for September. The pickup was led mostly by food prices. At 4.7%, inflation in food and beverages rose to the highest since December 2017 as rainfall distribution skewed agricultural trends across the country. Vegetable prices rose by 15.4%, contributing the most to the rise in inflation. Rural inflation rose to 3.2% in September as against 2.2% in August. Inflation in urban areas stood at 4.8% compared to 4.5% in the previous month. Core inflation, which excludes food and fuel, continued to moderate, indicating weak demand. At 3.99%, core inflation was the lowest since July 2017. Rise in CPI has been contrary to the continued fall in wholesale inflation. WPI data released earlier on Monday showed that WPI continued to decline, falling to 0.33% from 1.08% in August, led by a fall in fuel costs and prices of manufactured items, which saw contraction.
Right, we'll have to see whether the RBI thinks that that's a temporary blip and whether or not it'll affect their current accommodative stance. For now, let's turn to earnings. Hindustan Unilever reported earnings in line with street estimates, with lower input costs boosting margins. Agam Vakil is standing by with the big takeaways from the numbers. Agam, boring as usual?
Right. Well, Alex, again, as you already put it, it's an inline set of numbers for Hindustan Unilever. To start off with your revenues, we've seen a growth of around 6.7%, which is just a notch higher than Bloomberg consensus expectations. And we saw considerable expansion in EBITDA margins, and I'll tell you a little more about why we've seen that. Net profits consequently rising, one because of EBITDA margins, and of course we also have the tax cuts which come into play, which is why you've seen that jump in profitability to the tune of around 21%. Now, what's behind the growth? Volume growth of around 5%, which is within the band of around 3 to 6%. So that, of course, is a positive considering it's on the higher end. And volumes were, perhaps to a certain extent aided by the price cuts that the company took in personal cleansing. And that has, of course, led to higher volumes. But in terms of margins, what really stands out is the improved product mix, and secondly, and perhaps more importantly, the 250 basis points expansion in gross margins. A lot of this which was passed on to consumers. And we've actually saw a year-on-year drop in raw material costs, and if you take a ratio of raw material costs to revenues, it comes at 33% against 36%. So this is the reason why, along with corporate tax cuts, is the reason why we are looking at that sharp jump in net profits. Finally, coming down to segments, well, its largest segment, that's the personal care segment, has seen a growth of around 5.3%, and this is the most subdued. Other than that, home care has grown well by 9.5%, and foods and refreshment has starting to see a lot of traction according to management, specifically in ice creams as well as your beverages, and that's the reason why we are looking at an 8.5% increase. On the whole, a steady quarter. Well, no fireworks, but this is largely on expected lines.
All right, Agam, you did mention price cuts. The management, in fact, had to say quite a bit about the cuts across the various categories. Let's listen to what they had to say.
We have seen softness in commodity, predominantly in veg oils. We have seen some softness in crude, which means that we don't have to price up. And if there are some opportunities to price down in home care, we will use those, but we'll be judicious. It has to make sense. However, when you look at, let's say, something like our foods and refreshments, there's actually inflation. Whether it's sugar, whether it's SMP, whether it is even our ketchups, I think there's a sizable amount of inflation coming through, and you'll need to balance it. And as Sanjeev has always said, we will take an overall HUL approach to handling how we look at the portfolio, and it doesn't necessarily have to be a category by category or a pack by pack.
All right, now, the only other nifty company reporting numbers today is Wipro, and Wipro's margins are expected to remain under pressure as the company absorbs the full impact of wage revisions. Agam Vakil is still with us to take you through the key expectations. Agam, how's it looking?
Right, Alex, the earnings for Wipro are going to be a tad different from what we saw in Infosys and TCS, because there's going to be some amount of weakness here. As far as your top line is concerned, we're expecting a marginal up move around 0.7%. Margins could actually contract in contrast, of course, sequentially, and well, net profits were likely to see a decline of around 5.1%. Now, the reason behind the subdued growth is the fact that we have seen weakness in financial services vertical, and there has been a lot of caution when it comes to spending in Europe, as we have seen in case of, well, Infosys and TCS. And of course, IT services revenue guidance was at around 2,039 million, but analysts are expecting them to come through. It wasn't a spectacular guidance in the first place as far as the first quarter is concerned. So it's unlikely that the company may miss the guidance for this particular quarter, given that we are in a seasonally, well, strong environment. That said, in terms of, well, guidance going forward, again, likely to be somewhere around 0 to 2% for the third quarter of this financial year. In terms of margins, they are expected to remain under pressure because we're likely to see the full impact of the wage revision to come and play into Wipro. That's something that has been extended as against its other rivals, and of course, premium pricing and operational efficiencies perhaps could partially counter, this contraction. But on the whole, it may be a very subdued quarter for Wipro going in.
Thanks so much for that, Agam. All right, what are the stocks that you have to watch out for with regard to them being in the news? Somit Sarkar is joining me now to tell you all about the stocks in news. Good morning, Somit. What's on your list today?
Good morning, Alex. I'll start off with the earnings first. GTPL Hathway, where they have announced the second quarter of financial year 2020 results. Now, the revenues were higher by nearly 95%, EBITDA jumped 41%, and margins came in lower at around 19.7%, while the net profit was almost double. Now, this numbers are not comparable because these numbers also include the EPC project business, and the strong revenue growth was due to inclusion of this EPC project business. Now, the raw material costs of the EPC business and the expenses did dent the margins for the company in the second quarter of financial year 2020. However, the media business of GTPL Hathway, now that clocked a strong growth in the second quarter. Secondly, Delta Corp also reported numbers where the revenues were flat at around 201 crore rupees. EBITDA was higher by nearly 3.4%. Margins came in marginally higher at around 40.5%, while the net profit was up nearly 23% compared to last year. Now, the revenue were flat and a lower tax, and that is what boosted the profits of the company, while the online gaming division revenues were strong, while the casino and the hospitality business revenues disappointed in the second quarter of financial year 2020. In other stocks to watch, firstly HDFC, where they have reduced the retail prime lending rate by 10 basis points. Z Entertainment, where VTB Capital acquired the right to direct disposal of 10.7% stake held by the promoters, that is SL Media Ventures. Now, this move is in line with the management commentary on the conference call that was held last week. Indiabulls Housing would also remain in focus because they are now awaiting SEBI nod before deciding on the buyback. Now, the board is inclined for a buyback, but they will take a final decision on this proposed buyback upon receipt of confirmation from SEBI on required debt to equity ratio. Now, the promoter group, in the board meeting, they also decided that the promoter group will not be participating in the buyback if held in future. Lastly, a couple of stocks that would remain in focus because of bulk deals. Firstly, IRCTC, where Reliance Mutual Fund has acquired nearly 15 lakh shares, and secondly, Fortis Healthcare, where East Spring Investment has acquired nearly 40.5 lakh shares, and the seller was Yes Bank.
Thanks so much for that, Somit. Now, on to news on technology. Apple, which recently launched a series of new products, is witnessing higher than expected demand for its trademark iPhone. Why? Take a look. All right, let me take you through some of the stories that are on the website, BloombergQuint.com. First up, the BSE will suspend trading in shares of as many as 16 firms, including Manpasand Beverages, Benign Industries and 8K Miles Software Services from early next month for not complying with listing norms pertaining to submission of quarterly financial results and other things. Well, do look up the entire list on the website. Also, if any of these companies meet the required norms, according to the SEBI, they won't face suspension. Paytm is close to securing $2 billion of new financing from investors including Jack Ma's Ant Financial, Japan's SoftBank Group and Rob Citrone's Discovery Capital Management to fend off an influx of new rivals in the payments space in India. That's according to a Bloomberg report. That's all you need to know going into trade today, but do stay tuned. There's a lot more coming up in just a short while. This is Bloomberg Quint.